Good morning. Happy Friday. What's going on, guys? All right. Market has popped. We got U.S. unemployment rate, U.S. non-farm payrolls, U.S. average earnings year over year. That all hit at 7:30. By the way, as far as time zone, we are central around here. The futures market is, well, Chicago is going to be the capital, essentially, of the world. So we run on central time around here, damn it. But U.S. unemployment rate came in at forecast, 4.2. U.S. non-farm payrolls came in high. The actual was 177K versus a forecast of 138K. U.S. average earnings year over year was 3.8% versus a forecast of 3.9%. If you trade, take profit trader. That was banned news from trading. So if you traded that news event, you might have some issues with take profit trader. So hopefully you held off. Hopefully they sent out like 2 emails. So you guys probably know that already. As far as news for the remainder of the day, we have U.S. factory orders month over month hitting at 9 a.m. And that's it. That's it. We're free and clear then for the remainder of the day. What's up, guys? How we doing? Gaines, Nickelbag, Chris, Josh, Rick, Rufio, Matt, Steven or Stefan, not sure which one. Maury, Jet, what's up, guys? Good morning. Welcome back. All the regs are in. A few new people. Ken, Dale, Whitewater, Joe, Exposed. Welcome back, guys. How you doing? Morning, guys. John, Scrumptious, Higher High, Scooby-Doo, what's up? Antonio. All right, guys, we are about 60 seconds out here from the opening bell. Range is going to come in pretty controlled here into the open. We're below 20. That's going to pop above 25 after the open. Now, how much above 25 is up in the air? Hopefully, we get a relatively volatile Friday. What we've been seeing a lot of lately, though, is choppy volatility. The ranges have been good. At least they were. Yesterday, we toned down a little bit. The range is on a 2-minute bar I'm talking about, right? But, you know, Tuesday and Wednesday, especially, I was red on Tuesday? Gotta have a short memory. I think I was red on Tuesday. That was my red day this week. So we'll see if we can put something together here today. But what's been going on here is we get a lot of controlled volatility that looks good because the ATR holds up. And then what happens is you get random tariff news and it wicks. And we've gotten that every single day, and it's gotten some people in trouble, I've seen. There is the opening bell, so we'll see what we get. But again, reminder, if you're a little bit newer around here, I don't think you always have to trade with live stop orders. I think if you want to trade naked, sometimes in some markets you can. In this market, that's a really bad idea. You got to have live stop market orders, even if they're very wide. Just put it out. Okay, it's not worth having Black Swan, but this happened like every day so far this week, where the market moves, 100 points, 200 points. We've seen 400 points in the last like 30 days on one random unscheduled news headline. You don't want to be caught on that. All right, so we will let these institutional orders take care of business, clear out. Again, they are looking way ahead. Not quite as much of an intraday mentality out of them, so I don't really care too much what they're doing here off the open. Not a lot of volatility so far in the first 60 seconds. But market inertia, this is the other side of business that we got to finish out here before we start having fun. The market inertia lately, we were seeing a lot of range days. Now what we've seen this week is... Here, let me see if I can show you this. Well, I'm not going to be able to. But if you look at the range on the actual New York session, okay, it's collapsed since back here. This is just the New York session. All right, I don't care about Globex for the context of the New York session context or the inertia, right? Volatility back here, meaning the range on the day, how wide the range was that we traded in during the New York session only, collapsed coming into here. And it looks like it's gained a little bit, but it really hasn't, because these were wiki days. Now, these were more range days, arguably, because when you get wicks with small bodies on daily charts, what does that tell you? Well, it tells you it tried to break in both directions or one direction and failed. It wicked back. That's what a wick is telling you. That's a range, right? That's a tighter range. Now, lately, we've been seeing small, I'm going to say volatility, so I don't have to use the word range and confuse everybody. We've been seeing lower volatility days, but they've been more decisive. Okay, there's less wicks. Sure, we got a wick here, we got a small wick on the bottom here, but we've kind of seen slow, melty movement really to the upside lately. It's been. So here's what I'm thinking today. All that to say this. I am not gonna be taking big breakout bets today. The probability of that occurring is extremely low based on the market inertia. Could it happen? Of course it could happen. And if you're someone who likes to trade super low probability, stupid high reward to risk, have at it. For me today, I'm thinking range, 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 but probably a relatively wide range. And then maybe mid-morning here, we end up seeing a melt in one direction or the other. We've gotten that a lot the last 2 or 3 days. You see a little, kind of like this, honestly. Like this move here, this one happened to be to the downside. We saw this to the upside yesterday. Wednesday, we saw it twice at 2 separate legs. What happens a lot when you get a range-bound market and a melt move in one way or the other, let's pretend you're getting like a melt up, and let's pretend it's like 9 a.m. Central, okay? A lot of times what you see is you see a melt upside, and then it kind of tames out and starts to widen from a tight melt to a widening sideways or slightly ascending movement. That's really beautiful for channel scalping if you can get a clean development, okay? That's the business talk for today. That's what I'm looking at here so far. So let's let these institutional orders clear. Again, we got factory orders month over month hitting at 9. And aside from that, we are clear to do as we please. Other than that, man, how we doing today? I think it's about time for a social hour here while these institutional orders clear up. I'm always actually really curious about this. Do you guys like the weekend? Because a lot of traders can't stand the weekend. I've learned to enjoy weekends, obviously, spend time with the people you love, hang out. It is important. You know, a lot of you guys wish that you could just trade every day. It might get exhausting after a while. But I get it. It's tough when it's like Saturday afternoon and you're like, all right, what now? I get it. But if you really need a fix, you can either go look at your data, you can look at charts, or I'm going to throw up a live stream all weekend of all my live trades I've taken so far. So if you guys want to tune in there, you can, that should keep you held over. All right, here we go, getting a bit of a widening out bar. Oh goodness, you look at this range so far off the open, guys. This range is tight. Oh man, yesterday, I think the opening bar yesterday, if I remember right, was like high 60s on the range of the 2-minute bar on the open. The opening bar today was like 40, not even. Tight. Mids, weekends for golf and fishing for mental clarity and reset. Yeah, once, you know, when you get more of a handle on how you're feeling psychologically as a trader, which it just comes with time. The more you sit in front of the screen, the more trades you take, the better you get at having a handle on that. I think a lot of people I think Tuesday, Wednesday, Thursday is like crunch time. Monday, you're kind of getting back in the swing. You know, Mondays are the kind of days where it's like, you know, sometimes you pop in, it's like, oh, I forgot to turn on the copy trader. Like, you make stupid little errors. And then by Friday, it's kind of like you're just trying to finish out strong, do what you can, do your job, and then accept the outcome and leave. Which goes to show, I think that rest time is important for traders. But I do think Sunday data review is huge. I've done data review over the weekend, at least for maybe an hour, as long as I can remember. But it's relaxing. It's not like, it doesn't feel like work. I like looking at numbers. All right, well, we are testing now. Take a look here. The 20 EMA on the 5. Okay, so again, this is still kind of the tail end of institutional orders. So gotta let these clear. I mean, again, these don't really have too much of an intraday mentality. And the move you get coming into the open and the move you get immediately off the open, a lot of people think it's representative of what's to come. It's basically a 50-50 shot because it's mostly institutional orders. So I tend to kind of ignore the move into the open and the instant move off the open unless it's like a CPI day or something in 2022, you know, where CPI is like extremely relevant, or we get tariff news or something to that effect, something that fundamentally changes how it should trade. Unless we get that, I'm kind of ignoring this until I can start looking for setups, which we'll do here in maybe about 5 minutes. Simple trader, first full week green after 3 months. I hit 100% win rate. Average size is 1 to 2 contracts. Are you trading minis or micros? Daniel says if Friday is green, makes enjoying the weekend much better. Yeah, I'm not going to deny that there's an aspect of that. That's true. It kind of sticks with you. If you have a red Friday, it kind of sucks. But once you get to the point where you care less, because you know you have edge. I don't mean you care less about making money, or you care less about growing. That just gets hotter and hotter inside of you. But you care less about each individual day's outcome. Because again, when you're doing your data review every Saturday, every Sunday, maybe whatever, every Monday night, whenever you do it, you look at it and you say, okay, well, the more I do this, the more money I make because I have a statistical edge. Same business model that a casino runs. You look at Vegas, it was built on the same business model, just a slightly different variation in the numbers and obviously a different business. Okay, that gives you all the confidence in the world when you know that your numbers work. And then when you're red on a Friday, it's like, who cares? It was a small part of the sample size that ends green at the end of the month / year. All right, so, I'm interested to see if we get a test of 20K. Again, I don't trade on information like that or on hopes like that, but I will happily use 20,000 as a stop hunting region, at least the first test of it after the opening bell, which we obviously haven't seen yet. So if we can get a downside move to 20,000, if we get some kind of continuation setup heading into 20K, I would happily slap a short down and try to take out whatever stops the longs have out, the bulls have out, sell market stops just below 20,000, because you know that they're watching it. Once you see a test of an S tier level like that, or even a tier 1 level after the opening bell, basically all the orders have been cleared, and it means less for the remainder of the day. It's still important, but with each additional test, it means less and less, with kind of a bigger drop off in how meaningful it is after the first test, if that makes sense. All right, 2 more 2-minute bars, and we can start looking at this channel that's developing here, right? So as expected, a lot of you guys are saying that you're not really big fans of the weekend. Obviously, we're all traders here. The rest of the world wouldn't understand that concept. I know that a lot of you feel that way, and if you really think about it, I think you'll understand that it's this aspect of almost like guilt that you have no control over, because you're like, well, I really should be trading. I want to get better, but I can't. What do I do? You know, ideally, you rest. You eat your meals. You train. That's all you can do. Spend time with family. Kids, obviously. But that feeling of guilt, I get it. Obviously, you know, you're not alone. You're doing your job. The market's not open. Okay, your job on the weekend is to rest up for when the market is open, so you can hit it. There's nothing you can do. You're not going to be able to march into the CME and say, open the futures market on Saturday so I can trade. So by resting up, you're doing your job. If you sit there anxious all weekend, like, I need to be trading, I need to be trading, I need to get better. Well, it's impossible. You can't. So your job is to rest, okay? If you're anxious all weekend, your performance will suffer on Monday because you didn't do your job on Saturday and Sunday, which is to rest. Yeah, crypto never closes. Crypto, I'm not a fan of trading crypto, man. Maybe unpopular opinion, but high fees, at least depending on which broker you go to. Huge, giant spreads. Oh, man. Makes it tough. Makes it tough. A lot of people don't think about the spreads. You know, when you go to, let's say you're trading SPY, okay? The market's a penny wide. Futures, extremely liquid. They're going to be like a tick or two wide. All right, you can get a ton of leverage for very little like juice, what they would call it in like the gambling world, right? Now I'm going to make a comparison, which is why I bring that up. You pay the juice like sports bettors, you're paying huge like spreads. In our world is what we call it. In their world, they call it the juice. It's massive. You can't make it up. It's impossible. Now, obviously, there's like sharp. Sports betting is a bad example because there are like sharps and there's crazy stories. But like playing slots is a good example. The juice or the spread that you pay is massive. Their edge, they just build it in. Okay, so with the market though, people like to make the gambling comparison, but you should explain to them it's like, okay, look at how much of a net position I can acquire, whether it's leverage like in the futures market or you're just buying straight up shares of SPY, whatever. And then look at the spread. It's like a tick or 1 penny. That is the juice, which is essentially a net zero. Okay, so all else held equal, random buying and selling, okay, obviously not holding long term, market tends to go up long term, but random buying and selling throughout the day, if you remove commissions and fees from the equation, is essentially a zero-sum game, which is why you can find edge. Okay, because it's zero-sum essentially when it's random, right? So if it's not random and you try to find little instances during the day where Oh, probabilities 55, 45, 1-to-1, hit it. For the next 10 seconds, it's 55, 45, hit it. Because you can read the relationship between the buyers and the sellers. You can see real levels. Okay, I know a lot of bulls have stops in this region, right? So I think we're gonna break. I think the sellers are outweighing the buyers coming into that region. The bulls are sweating. 55, 45. It's no longer zero sum if you only hit A quality setups and above. Horrible comparison to compare trading to gambling. Now, you can use the market as a casino. You can. But if you're going to do that, just go to a casino. All right, well, I'm looking for setups here. We're forming maybe a little bit of a flat top. You see this up top? We are well into my territory that I can start putting some things on here. So just watching to see how this develops again. Getting a lot of back and forth. Watching to see if this little wedge here develops a little bit more. I mean, this is so aggressive. I'm not a fan of these very aggressive levels, but I know that the bulls are going to be kind of looking at that and hoping. We have a flat top in this region. Don't overthink it. Just draw it how you think the average of 1,000 people would draw it. Now, these little widening, aggressively widening wedges, these things don't tend to hold up very long because you're asking for a huge increase in volatility on every test. They just don't tend to be relevant for very long. We're going to watch that. But that flat top up top has me more interested than anything, got to tell you. All right, coming in for a 5-minute 20 EMA test. That's sitting at 2057-ish, 55. Kings, Nico, I don't understand these spreads and fees you say about crypto. The exchanges I use are little to none, better than Forex. My trades on average are 35 cents tops round trip. Yeah, well, fees. So you can get commission free brokers or exchanges, I guess, for crypto. I'm talking spreads. Spreads are my number one concern. They're ridiculous. You want to buy Bitcoin, the bid is one thing, the offer is a whole other story. The market over there is not a couple pennies wide. It's huge. That's the juice, right? You want to get in now, you have to pay the offer. You turn around, you want to sell immediately, you got to sell at the bid. You have to make up that difference to make any money. Good morning, Eric. Welcome back. How you doing? All right, we're getting kind of stuck to that 20 EMA on the 5. We're pretty much right at it right now. You're looking at a 2-minute chart right now. Here's the 5-minute look. We're pretty much stuck to it. Brandon, good morning. Welcome back. Gibbs, welcome back. How you doing? All right. Yesterday's New York session high. Yeah, Yeah, there you go. That explains the flat top. Yesterday's New York session high was 20,125.75. Right about there. Really shouldn't be that big of a deal. We should be able to push through that pretty easily if we continue upside. But you gotta tell you, I don't care which direction we go as long as we break out of this little garbage. There's a push, look at that. It's a big old wick, huh? Yeah, that to me looked like a little bit of a news wick. That's exactly what I'm talking about. Less extreme, obviously, but that's what I was talking about at the beginning of the stream. You got to be careful. You got to be running live stop market orders in a market like this, because that wick right there, that could have been 150 points. All right. Interested in this bar? This bar rolls over in 1 minute and 20 seconds. If we can see this wickiness calm down a little bit in the next minute, and then we get a close near, very close to, if not at, the low of this 2-minute bar without it getting outsized, then boom, I sell the rollover. Looking for a stop hunting mentality through 20K, as discussed earlier. $45 seconds out. See if the Bears can kind of fix this up here for me. Oh, come on. See this Bulls? Trying to reclaim the 20 EMA on the 5. Oh, come on. Give me it. We're not going to get it, are we? It could have been a beautiful setup. Use the, again, stops below 20,000. Push me right to target. Bulls aren't going to let me have that one. No trade for me. Yeah, you know, I'm just going to point this out. When people say, now listen, obviously, not every trade I take is going to work. I don't want this to come off that way at all. Like, that would be a ridiculous expectation. But those of you guys who are trading, I see a lot of you guys come in here and I don't know where you're, it seems like everyone's learning about the 15-minute opening range break. Maybe someone's talking about it. I don't know, but this is the problem with that just trading that strategy every day. We talk about market inertia, right? We're in a range market. We're not in a breakout market. We're in a range market. So a lot of people are like, I'm just going to trade the 15-minute orb every single day. Well, you take that breakout, guess what? We're in a range market. That's why I'm waiting for the bars to close, so that we can spend, you know, another 60 seconds below there and show me that, hey, the sellers really are in control. This isn't just a test where the buyers are going to wick this thing back up, which is exactly what they just did. Because, again, we're in a range market, so if I'm going to take continuation, it damn well better have proved itself, which is what I was waiting for and that we didn't get. All right. I don't believe there's going to be edge in just taking the, because listen, 70 to 80% of days are going to be range days. So I think it's not a very reasonable expectation to think that there's going to be edge blindly buying the or selling the 15-minute opening range break every day. In a breakout market, yeah, I'm sure there is. But I need more than that. It's not quite that simple. It's not that rigid. Trading is not that rigid. It's like this setup, I was taught this setup, I do this every day and it pays my bills. You need to understand market inertia. You have to understand, okay, well, what's the market actually doing? Because it tends to do what it's continued to, or what it's been doing until something fundamentally makes it shift. Well, we've been ranging. Okay, you could have taken giant breakout bets every day for the last 3 weeks. It would have failed. But if we were in a trending market, you could win 7 in a row. Right? So, it matters. It matters a lot. No, Scooby, I know. I just, learning opportunity for everybody. We're clearly in a range here. Now, again, buying descending support is lower probability than buying ascending support. Okay, the same way that selling ascending resistance is lower probability than selling descending resistance. So in this case, what do we have? We have essentially a flat top, potentially, arguably. We have 2 touch points so far of a descending resistance here. Still this flat top here. But this may turn into a descending range. And then we have a descending support. So I'm more interested here. If we see a breakout, maybe upside breaking through the flat top, I would go long continuation if we got the setup. But if this turns into a descending resistance and we get a 3rd touch point with fully, like, not mushy rejections, right? Fully continuation rejections, then all of a sudden I'm trading the range short. Gotta do what makes sense. That being said, do you use the 15-minute opening range breakout at all for confirmation bias? Example, only going long if above orb? I don't think about it that way. I see it, but I don't think like, oh, that's a 15-minute opening range breakout. I more just think, okay, those stops were just taken out. And yeah, they were set early in the day. I think about it that way. But it's the same thing. So yes, I guess I do use it. But more to just as another factor to throw in the mix and then look at once the water clears and say, okay, does it make sense? What's up, Pumple? How you doing? Welcome back. That's the 9 a.m. bar. Again, U.S. factory orders should be hitting. And they did. Forecast was 4.5%. It came in at 4.3%. That's U.S. factory orders month over month. Okay, now as far as scheduled news today, at least what's on the agenda, that's it. Okay, we are clear for the remainder of the day pretty much. But always expect unexpected tariff news. Steam. 1-to-1 reward to risk can be harder to achieve in range-bound conditions. 100%. I'm glad that you're thinking that way, which is why in range-bound conditions, if I'm taking channel scalps, I'm more likely in a channel to go negative reward to risk and manage a trade like early, but really intending negative reward to risk. I'm more likely to do so on a channel scalp than I am on a continuation scalp. But you guys have seen that sometimes a continuation scalp will call for it if the range of the 2-minute bars collapses while I'm in the trade. But it's less common. Continuation is more likely to be 1-to-1, whereas channel scalping, I'm more likely if I need to go negative reward to risk. Okay, let's see if we can come up here. Now, this is kind of a moment of truth for us, because we're testing that little descending resistance, but we could also just head right up and test the flat top, which I gotta tell you, I would probably prefer a break of the flat top with a continuation setup, because that would be a trade that I could put on here in the next 2 or 3 minutes. I'm always kind of rooting for whatever gives me a good setup more quickly. Did you guys catch that? I think my fan just blew, maybe not. My fan just blew off one of the sound treatments off the back. I heard something like crashing down behind me. Okay, we got to break through that flat top. It's a big outsized bar. I want to see the rollover here and then how the break of that pre-market high, not that it's as meaningful to me, reacts, but this is a big outsized bar, so I can't take continuation when bars are this outsized. But if we get a calming 4th bull bar in a row, I'd slap it on. We got a big wick back anyway, you guys see this? So the bears are stepping in the last second, pulling this back, which renders that setup worthless anyway, at least to me. So this next bar here becomes very important. Bulls already trying to pull that back. You guys see that wick, you get the rollover. Bears are kind of in control because they were pulling it back, wicking it down, even on a big green bar. The most recent information is what I'm interested in, right? Looking back on the chart, it's good to look at as far as, you know, self-fulfilling prophecies, okay? Like a really obvious descending resistance. It's really obvious, so it can give you positive probability as a self-fulfilling prophecy, but that's all. No other reason at all. It's just that other people see it. But I'm more interested in the most recent information. Okay, which is why, you know, some of you guys ask, well, we saw a wick in the last 5 seconds. Isn't that good enough? And the answer is no. No, it's not good enough. Not for me, because it was good 7 seconds ago. But on the rollover, if the bears step in, wick it way back down, what does that tell you? I don't care what it did 7 seconds ago. I care what's going on right now. Because something shifted. That makes the setup not too great anymore. Okay, we got 15 seconds here. Bulls are struggling to take this above the previous bar's wick, which really also happens to be kind of right around, you know, the pre-market level. Again, the pre-market level, as far as stops, are there going to be like a million stops above there? No, I'm sure there are some, but I don't think that's going to be like a 20-point stop hunting push. See here, the bears are attempting a reversal sequence. Those bull bodies are shrinking. We'll see if they can succeed at it. Lock can change here in a couple of minutes. This here, what you're looking at, someone's asking in the chat, this is Ninja Trader. This is Thinkorswim. I like to run both. I've used Thinkorswim the longest, but Ninja is where I execute the orders. Now, oh, you guys see here, we're forming another flat top. This is very, very representative of a range-bound market. You get any little attempt at a breakout and you start forming flat tops, you start fading, you start getting attempts at reversal sequences out of the other side. See if we can snap up this flat top, get a nice, slightly growing bull bar closing near the high, good rollover, and a hard push, but not too hard of a push upside, and that would be a beautiful setup for me breaking out. There's the breakout attempt. Okay, let's see if we can get a nice clean close. We got 1 minute and 20 seconds out until the close of this 2-minute bar. Aaron says, I'm long, but it feels like gambling. Yeah, listen, guys, if you're taking trades, and we all know the feeling, right? Like, sometimes you take a trade and it's like, I don't even care what happened. That was a beautiful trade. I love the trade I just took. That's what, like, all your trades should feel like, at least most of them. But if you're consistently taking and 90% of your trades are like deep down, you have that gut feeling where you're like, I don't know if I should be doing this. But let's see if it works out. Like, you don't have enough confidence in your setup yet. Which means you need to not go back to the drawing board, but it means you need to start testing your setups and getting more data. Or at least studying a setup that someone else has developed and kind of replicating it with a twist that's your own. So you can borrow confidence from somebody else's setup if you need to. Yeah, you see this though, the bears, any attempt at a breakout, the bears are like, nope, range market, step in, I'm gonna short that. I'm in for a retest of that previous flat top line that we had drawn. I mean, you take a look here. All right, 45 seconds till the close of this 2-minute bar. All I need are 2 clean 2-minute bars. And I'm good to slap it on. See how wiki these bars are? Alright, beautiful. The 2150 tier 4 level, I don't care about that. Okay, there was an attempted push into the highs. We got 55 seconds. This 1 bar would not be enough for me, but I want to see a clean close here, rollover. That rollover bar could turn out to be an entry bar for me. If this one cleans up. I mean, the bears just aren't having it. I'm gonna wake up every little breakout attempt back. Okay, this here could be an entry bar for me, and since we have 90 seconds left, I'll just quickly explain the tier levels instead of, I'll get it typed out so I can drop it whenever I need to. S tier, 20K, 15K, 25K. Tier 1, 21,000, 22,000, 19,000, 18,000. Tier 2, 20,500, 19,500, 18,500. Tier 3 are the hundreds, every $100 level. And tier 4 are the 50s, every $50 level. All right, if we get a nice clean close, very near the high of this bar, I will slap on along on the rollover for a little continuation setup. But can't have this bar growing too much, so I need the bulls to kind of calm down here. All right, good. They're slowing down a little bit. $30 seconds. Come on, bull. Show a little backbone for once today. $15. I need the bulls to take it higher. We're too much of a wick. Come on, bulls. Take it a little bit higher. A little bit higher. Oh, that wick is just ugly. Gotta hold off. That'd be a rule break if I put that on. Not interested in breaking rules. Discretionary call, by the way. The bulls just struggling way too hard with that wick from the bears. The bears still, you can tell when you watch the price. The bears, they just have confidence on every breakout. They just short it. Because we're in a range market. Right, we need to stomp that confidence out with just a beauty of a continuation setup where all the bears kind of look at that and they go, all right, I'll step out of the way of this one. Boom, that's when I hit it long. See, look at this. Here we are, a minute 15 seconds later. Bulls struggling to even reclaim the high of the what was potentially entry bar's body. I mean, the closes of these bars, it really tells a story. And the 2-minute chart is not magic, by the way. For me, it's just the best balance between quality of setups and quantity of setups. Now, I'd prefer a few more setups, obviously, but the 1-minute chart provides that, but quality starts to dip. The 5-minute has even less setups, but the quality is even higher. That's how you should select what chart you trade. Really no other reason. All right, attempt at look at the 5-minute especially here. Attempt at a reversal sequence out of the bears. See a big, what a lot of people would call a gravestone doji there. All right, range. Range is actually holding up, not too bad. Range is currently sitting at 30. That's the average range in terms of points of the last 10 2-minute bars. Now, with that above 25, I'm good. Below 25, we have to start making a few shifts. I see the Bears can't put anything together either here. Here, let's look at the 5-minute for a second. You see that 20 EMA in the 5-minute? A lot of people might argue, well, we're looking at support there. Right now, I'm more interested in this look. This is the 2-minute chart. If we could see a third, which we're starting to maybe see, but this bar only has 47 seconds left. A push downside, a growing bear bar closing at the low. You'd think, boom, continuation to the short side, right? Sell the rollover. Well, it depends on where it would close, because the 20 EMA on the 5 is at 20,087. If we close anywhere at or above that level on the 2-minute bar, I can't short heading right into where a lot of bulls are going to get their confidence from. So right now, I'm just watching very carefully, waiting for this market to give me something of quality. So far, so far nothing of good quality all morning. All right, rollover of this 2-minute bar coming in 30 seconds. All right, now I'm watching. This is a pre-market level. Okay, I don't like to make self-fulfilling prophecies based on the pre-market level. So I guess a lot of people would probably draw this like this. Well, it's only 2 touch points. Not the highest quality line ever. But I know that, you know, there's going to be some bears out there looking at that like, I'm going to short that. Okay, fine. So that was a beautiful close on a 2-minute, a little bit large. If we got to close on this bar, like up here at like 20,175, maybe, you know, it takes maybe 2 minutes for the trade to play out, kind of like an average. And you get a push. It leaves 15 points before all the bears have a bunch of confidence, which is not good for me, right? If I'm sitting long, I want the bears to be feeling horrible about themselves. You know, this is kind of just a puzzle every day. Just look at all the psychological factors that your enemy, so to speak, whether you're going short, your enemy's the bulls, right? If you're going long, your enemy's going to be the bears. Try to figure out when your side is feeling the absolute best about themselves and when the other side is feeling awful. And don't go off, you know, obviously discretionary calls have to be made, but a lot of it you have to go off of, okay, well, what are they looking at? I spend more of my time, now that I think about it, I probably spend more of my time thinking like the enemy, so to speak, than I do thinking about my own side. If I'm going long, I'm thinking, well, what are the bears thinking? That's what I'm thinking. And I want them to be feeling just horrible at that very moment, to give me that 55 or 60% probability at 1-to-1 reward to risk. You know, the futures market is priced efficiently. It's never going to be 95% probability, at least not very often at all. Almost never. Intraday, the best you're getting is 55, 60, so you gotta try to find those. But in today's little range, we're not being left with a lot, at least not yet, but we're not even close to done. We're just getting started here. I'm gonna leave that trend line, because I know bears are watching it. It's not extremely aggressive. It's actually a rather timid ascending trend line, which is fine. I prefer those. They tend to be seen more. Okay, here we are, coming in for a test, about 8 points out, 10 points out from a test. We'll see if the bears see that enough to slow down the bulls. The trend line's sitting at 20,189-ish. Call it 20,190. "15 seconds from the rollover of this 2-minute. Now you see here, we're still inside. Okay. I'm not against continuation if we can see a break above that trend line. So while that's a beautiful setup, I mean, I would put that on if this wasn't there. I'd put that on long, but I know the bears are seeing that. Okay, so I can't, obviously. All right, well, while the bulls and the bears argue it out and give me something, I'll be back in 2 minutes. Don't go anywhere. All right, so I'm watching this little ascending support level that we now are seeing. Let's actually zoom in a little bit here on the 2-minute. I gotta tell you, I'm watching this develop. Now, if we see that turn into, well, you know, that's interesting. If we can break this little top here on this push, and if we reject, I do think I would take that third. Some people might call it fourth test. I'd probably call it a third test. So I'm now becoming more interested here in scalping the channel, just straight up channel scalping. Buy low, sell high scalping. As basic as it gets. Joseph, on the 2-minute, wouldn't the first touch point on the resistance be on that earlier high? If so, you would have 3 touch points, no? Here, let's look. On the 2-minute chart, you said. The earlier high. So if we extend this, are you looking here? Maybe you're looking here? Because I don't like to include pre-market levels if I can help it. This here was off the open. Okay, so here we are getting a retest of the trend line, by the way. Now, you guys know, I mean, if you've been around here for any amount of days, you know that when we see, I never know how to exactly explain this. When we see consecutive bars, one making a push, the next bar making a retest of a trend line, that's very aggressive. And what that turns into, exactly, Chris, you get a mushy bounce, in this case, bounce, not rejection, bounce. And then you get an instant retest, which tells me something shifted. Because the previous tests, it took many bars to see the same thing occur. And here we are now getting a push, instant retest on the next bar. The probability shifts big time in that case, in my experience. But what it does is it potentially gives you or I should say gives you potential for a continuation setup, break downside through to start forming, which can give you a setup in a couple more minutes. Morning, Vinny. How you doing? Now we're watching. We've been getting teased kind of all morning. We had a lot of close calls for setups. There's been something wrong with everyone that we've gotten. But again, we're just getting started here. We're not done. Well, bulls are trying here, but look at this 2-minute. When you can kind of see the struggle here on the 2. This is really common. You end up getting a mushy bounce like we saw, a quick, swift retest like we just talked about, and then on the break, you end up seeing a retest of the previous trend line, and from there, what happens on that retest is entirely 50-50. So you got to wait for it to make a decision. Scooby, you weren't wrong about this range day, Nico. Hands are getting cold over here. Yeah, range days, you can get some range days where it's like channel scalp every 10 minutes. So far, this has not been that. I'm kind of hoping it turns into that. It's out of my control. Range days can be great, but they can also kind of turn into this, which is a lot of teasing, not really a lot of quality setups. mean, look at the range on the New York session so far. It's tight. Like, this becomes a little more representative of what a trend market can kind of start to look like. This even isn't a great example. You see, we've seen mostly just range-bound markets for quite a while. All right, Bull's trying to take us higher here now. What we could do, we could look to make a little adjustment here, which I'm fine with doing, actually, because if we look at the... Oops. We look at the 5-minute. That leaves us maybe 20 points before a retest of the 20 on the 5. Which would still be within my risk parameters. Even if that trend line happens to fail on a retest that I would take. But what I can't see here is I can't see this happen. Okay, I cannot see that occur, so I would need to see this break this previous high. Even this high would be great. And then give us a relatively quick, not one bar, but a relatively quick retest here. And that becomes a buy setup for me. Now, in the meantime, there's always multiple ideas on the table. So in the meantime, the question now becomes, does that descending resistance become a thing? Or does this bar, look up top, does this bar push through that and close kind of right above this high, which renders a lot of that bear confidence kind of off the table? And that kind of turns into continuation with room for a push back up to this ascending resistance that we've had drawn the longest. So we've got a minute 25 to see if that occurs. There's kind of two setups on the table. And here we are getting a little bit of a mushy bounce. So if that descending resistance becomes a thing, you know what I'm thinking. And by the way, I hope this is starting to come to you guys kind of naturally too, because when I look at this, I immediately know what I'm thinking. You look here. If this turns into descending resistance, and those two things, those two setups we just discussed are kind of like off the table because this happened, now you're getting mushy bounces, which very often, guess what happens? You get a break and a continuation setup downside. That happens a lot if you get these mushy bounces. So we'll see. Well, listen, there's really three trade ideas on the table right now. We'll see which one we kind of end up getting here. But can't just slap something on because you're bored. There's no way to trade. Michael had to learn that the hard way a few times. Yeah, but it looks like the bears are starting to kind of pay attention to this little descending resistance. So if that holds, then a little trend line downside break and a downside continuation is even more on the table. Listen, if you guys haven't done so yet, please Press like on the stream. It really does help out a lot. I appreciate you doing so. Scott, time for defending line? Where? I'm not sure where you're looking. Yeah, you know, listen, guys, there's two ways you can look at a morning like this. You can look at it as, and you know, I'm guilty, of course. I get frustrated sometimes when I'm sitting here in the market. It's like almost set up off the table, almost set up off the table, almost set up off the table. I get frustrated, but there's two ways to look at this. You can just get angry and start throwing trades on because you're kind of like frustrated, bored, whatever, or you can take it easy. You can enjoy the market movement. You can have something on. I know a lot of hardcore guys, they'll say you need to be focused. Like, I don't know any traders who sit in absolute silence and stare at the chart for 6 hours a day. No one does that. That's not human. Okay? People, they'll, you know, oh, my, you know, the kids call, the grandkids call, your parents call. I don't know. You're listening to a trading podcast off to the side. You have some quiet music on. Maybe you have a book on one monitor that you're reading and you're watching charts on the other. You should enjoy this time. But if you start missing trades, you got to cut it. If you start missing trades, you got to do something less distracting. And you know what? Even better, if you want to be like back testing a new strategy off to the side while you're waiting for something. Hey, maybe you're trading an eval off to the side while you're waiting to trade your funded accounts. And you can kind of just take it easy. When the market's like this, you should still enjoy your time. And here we are getting a downside push through that trend line. Take a look. You can see we're coming in for a test of that 20 EMA in the 5 minute. For this to turn into a downside continuation, I'd have to see a nice clean close here toward the bottom of this bar, roll over, and repeat, and then I'd hit it. Bulls are wicking it back up. Typical range day. Joel, today's the kind of day like going to the gym, but the only available equipment is the treadmill. Yeah, you know, I'm always kind of shocked, like going to the gym, if you go like midday on like a Tuesday, and it's really busy. It's like, is everybody just day traders and entrepreneurs? Like, what's going on? Pumple, at this point, would it take 3 bull bars for you to take a trade, or 2 above the descending resistance will do? If I got a really clean 2 above any arguable flat top, I'd put on continuation if there was plenty of room before an ascending resistance. Yeah, TL Costco is kind of the same story. Vision, if you look at a 5-minute chart, we were forming a bull flag. Do you find those high probability? Not for me. Not for me. Doesn't mean they're not. It's just not. I don't really trade those. But we are, you know, there's no doubt about it. We are in a trading range right now. All right, retest here of that previous trend line that we had drawn. Right now, we just got to see a breakout of this trading range. I mean, this is for me, when a range gets this tight, this indecisive, this is tough to trade right here. Yeah, so that descending resistance that we were talking about here. Let's look at the 2. I don't like when I start getting 3+ lines on the chart, but we'll do it because we gotta. This is clearly, that's clearly happening. Okay, when this starts to tighten up, guess what? This becomes 50-50 and it breaks hard, one direction. So I have to wait for the break and see what occurs. Betting on which way this is going to break, especially when it's like a perfectly sideways collapsing like wedge essentially, or channel. Betting which direction this is going to break is I think a coin flip. All right, so you got to let it break, and then maybe oftentimes what you get when you wait for it to break is continuation. We've seen that many times here on the stream. All right, try to break upside here, outside of there. All right, there's the 10 o'clock bar. Not a lot of volatility, top of the hour, really. All right, there we go. There's a bit of a wick. Finally getting a bit of a push here. This bar rolls over in 1 minute and 10 seconds. All right, range here currently sitting at about 26. That's ATR. All right, if we could see... If we could see a nice close just above here, this wick here, that 930 bar, which really would need to be above 181 or so on this bar, which needs to happen in the next 15 seconds. Then I would throw this on as a long continuation trade. Come on, 5 seconds to see a pop-up above 181. We're not going to get it. Shrinking bull body. Got to hold off. Let's watch this third bar. Same idea here on this third bar. See those bears take it right lower. After you see that shrinking bull body, the wick back downside, had to hold off on that trade, and here we are, bears, a little bit of confidence. That's what I had to avoid. By the way, retesting that little descending resistance that we put in, at least trying to here. Heading back toward that wedge. Aaron, I flipped a coin, it landed on tails. Does that mean short or long? I don't know, brother. In this wedge, paint one side green, one side red, flip it again and see what happens. This wedge here, this is 50-50. Okay, inside of that wedge. Now we saw a breakout. Bears said, nope, this is a range market. They stepped in, shrinking bull body, didn't give me any kind of continuation setup, and head right back to the range. Now, if we look at this 2 minute, I mean, see, I would take this here. I would buy this us setting support if this was not here. But this was it's so damn obvious. I mean, everybody sees this descending resistance. We're even back testing it and holding it. At least the bulls are trying to. I'm gonna leave that. But I know that if we see a retest here and I buy that, guess what? You know, we get 10 points in the money, and all of a sudden the bears think they did something. They feel good about themselves. I can't have that. I want the bears feeling horrible about themselves if I'm sitting long. Tubed out. I'm a bear today and I feel horrible about myself. Well, you're a little more zoomed out, I think, than I am. Yeah, we're up 1.5% today. It doesn't feel like it, though, I gotta tell you. Feels like we're kind of sitting at break even on the day. Yeah, that ATR is coming in. We're now sitting just below 24 on the average range of a 2-minute bar, which is a little below my 25 kind of ideal minimum. But it doesn't mean that I have to be done at below 25. It just means I lean more heavily into negative reward to risk when setups present themselves. Matt, up 61.50 on the day. Gotta be happy with it. Be happy with it, brother. That's a great day. Well, as that ATR continues to fall, I start to think more and more about negative reward to risk. But I gotta see a break here. I mean, we're in a sideways range again. Look at these last two bars. The range has been about 12 on the last couple of bars. So if I were to take an entry, I would need to see that third bar expand. Good work, Matt. Yeah, I see the P&L in Discord. If you guys haven't joined the free Discord, chat it up in there. The more you guys talk in there, the more I talk in there. Yeah, Chris, give him a call. Give Quicksilver a call. Where is that guy? Whenever he shows up, market moves 300 points. We could use a guy like him right about now. Link for the free Discord is in the description of the stream. It's free. Ooh, TC. Good question. Would this range be something you take a core position and scalp around? Or is that on trend days only? That would, for me, that would be in a trend market, something more that I would do. By the way, it's a little more complicated to do that in prop, okay? Because you have to be very careful that you're not breaking rules. Like the risk reward. You have to make sure that you're doing math on how they're going to be calculated, your entries, exits, and P&Ls on each little piece. Yeah, scalping around a core position, it I wouldn't say it works better, but it's easier to do in a personal account just because you don't have to think about breaking rules. You can just manage your risk properly and put all your mental capital toward doing that. Gives and takes, right? Prop versus personal. ATR is collapsing. We're now at 20.8. But that average is really less what I'm looking at right now. The average is the blue teal flag at the bottom of your screen right now. The actual range per bar is what I'm more looking at. You look at these last 4 bars, we're having trouble breaking 10 points on the range. So we got to see that get fixed here. TC, tariffs are canceled would be great about now. Any tariff news at all. I don't care which direction this thing shoots. I just want to see something move. There we go. The power of talking about it. What just happened here? Maybe we should talk about it again. All right, nice little breakout. Here comes the rollover of that bar. Now this bar, this becomes really important for me. Let's see if we can get a nice upside push with a nice clean close on an equal sized bull bar. All right, quick, keep talking about tariffs in the chat. Make this thing move. That last range is about 23 points, so if we could see a nice push up past 20,200 and a nice clean close, we got a minute 15 till the rollover of this bar. $50 seconds out. Shrinking bull body so far. Gotta see a growing, well, not a growing necessarily, just equal sized at least around compared to the previous bar. Which for me would need to be above at least 20,002. All right, we've got 15 seconds here for the bulls to step in. Let's see if we can get a nice close above 22. Shrinking bull body. Same idea here applies on the next bar. Can't see it shrink though. That tells us a story about the buyer-seller relationship, right? Today is a beautiful day to practice your patience. It's really easy today to just throw on a bunch of trades. If you're going to do that, size way down, but I think it's building bad habits more than anything. And by the way, I don't say that lightly. You guys know I'm a guy that over trading doesn't exist if you have edge. If you have a positive expectancy on 100 trades a day, you should take 100 trades a day. I'm not one of those, you know, one trade a day and that's all you should ever take kind of guys. It's just that's got to take what the market gives you. Today we're not getting given a whole lot, are we? That's right, Zachary. This is the job. Zach, sorry. This is the job. All right. All right, I'm watching this trend line here, okay? A little ascending support. And if we get a nice controlled test, even though we're right below the 20 on the 2, it's not super psychologically relevant because there's not a lot of people watching the 2-minute chart, but even that being the case, I should say, I'm more concerned about that 20 on the 5, which actually acts as a secondary kind of backstop. I would buy that controlled test in that ascending support with the intent of going negative reward to risk. So we'll see if we can get that. Higher high. If morning session is kind of quote-unquote boring, is it more likely the afternoon would have more opportunities? No, I think of them kind of independent events. If the morning session is extremely volatile, usually carries over into the afternoon. But if the morning is very slow, melt up-y, rangy, whatever it may be, the afternoon is just as much of a coin flip. Because you could get unexpected news that changes everything, or not, and everyone just goes home. And it dies. Okay, controlled. Controlled is the key word. Test, and I would put this guy on. Let's see if we can get it. And I will get long there. So I'm now sitting long on that little trend line test. And volatility is not all that high. We're below 20. So average price here is 53 and a quarter. Stop down at 20,113 and a quarter. Take profit up at 20,193 and a quarter. Though again, I'm going, well, we'll see if I end up having to go negative reward to risk. Happy to do so in an environment like this, by the way. More so meaning like 1 to 2 reward to risk. We'll see. But orders right now are sitting 1 to 1. About 4 points, 3 points in the money right now. I'll go ahead and shift take profit to 20,173 and a quarter. And we'll go some a little bit of negative reward to risk action here. Low volatility. Again, I wouldn't do that if volatility was wider, if the average bar was higher than 25 points. But we may end up seeing, by the way, a retest here of the 20 EMA on the 5. That's fine. Well within parameters here. But currently like 5 points, 6 points in the green. All right, 12 points in the money. See if the bulls can push us just a little higher up through 70. Well, Vinny, there's different kinds of trading, right? There's continuation, and then there's channel scalping. You guys just haven't seen a lot of channel scalping, because we haven't had a lot. At least out of me. Again, still about 6 points in the money. All right, let's see if we get a retest of the 20 EMA on the 5. That is currently sitting at about 140, 141-ish. Here comes the test of the 20 on the 5. Well, bulls are trying to hold that 20 on the 5-minute. It's in just a couple points in the red so far. Yeah, you can see the bears are they're trying to take this lower. You guys remember earlier in the stream, we were talking about how anytime the bulls would try to break out, the bears would step in and gain some confidence. We're kind of seeing that in the opposite direction now. Again, if the bulls step out of the way, then you know, we get stopped. But in a market like this, a big range market, I can't go betting on big breakouts without clean continuation setups. All right, another tester of the 5-minute 20 EMA. Again, bulls trying to hold that level. There's a downside push here. Let's see if this turns into a bear continuation. Not yet. I already laid out the whole trade. It stops down at 20, 113 and a quarter. Well, back to the green on the trade. Here's the retest of that previous trend line, by the way. I know we're going to see a little bit of bear confidence at that previous trend line retest, but I just want to see it test here a couple of times. Kind of hovering right around break even here on the trade. We'll go red, green, break even. Really, only thing we have to clear on this is that previous trend line retest, right? So I'm paying most attention to there. It's sitting right around 20,160. Actually, a little higher now. A little bit of a potential flat top forming there, right above 160. I don't like right ahead of 165. All right, we're 10 points in the green here so far. Still getting little rejections off of that retest of the ascending, what was ascending support. Yep, sitting long currently. Right now about 7 points in the money. All right, 13 points in the money. We can see a test of through 173. That would hit me out. Still kind of dealing, of course, with this little ascending retest. You can see a little pop through. Get about 13 points in the green as we currently sit. That ATR is now sitting at 18.5. So it's still kind of collapsing down here. Just need about 6 more points, 7 more points. Couple more points here now. Give me a pop through 170 up toward 173.25. There we go. We're hit out there. Just a little guy. Again, that's negative reward to risk. Okay, so when you look like here, you see ATR 18.5. Okay, when ATR drops below 25, I have to lean more heavily into negative reward to risk. Win rate creeps up. Right, you still have edge. It's just a different way to make the data work. So that's it. Just a little guy. That's like what, 1,100 bucks. So we're up 1186. My typical trade is going to be somewhere between. Right now, it's been like 2,400 bucks on average. So again, that's 1 to 2 reward to risk. Negative reward to risk. Win rate creeps up. But on some little guys, they add up, right? So see what else this market gives us here now. About 1040. I'm not done. I'm gonna keep seeing if the market gives us some. I think we should make an adjustment because this here is turning a lot more into like a flat bottom, but it's not quite there yet. So I'm just gonna delete this, and we'll kind of reset our thinking. Corey, 2SS, appreciate you. Hope you enjoy hanging out. Jeremiah, does Thinkorswim have a bar timer? You could script one, I'd bet. I don't know if they have. They have it up in the top left. But like the way I have it on NinjaTrader, like right in the corner, which is super convenient. I don't think they have it. You'd probably have to program it yourself using ThinkScript. Which if you do a little Google, it shouldn't be too tough. Hey John, that copy trader, I have no affiliation, I just like it. It's by Affordable Indicators. Alright guys, again, I'm not done yet for the day, but I'll be back in a couple of minutes while some new setups hopefully present themselves. Don't go anywhere. All right. Ken, Nico, does joining the channel get rid of the ads? You mean like the YouTube ads? No. No, I can literally turn it off and YouTube still plays. They made that change a few years ago. You cannot have a monetized channel. You can turn it off. It used to be so that you could turn the ads off so your viewers didn't have to watch the ads. But now they throw ads on every video, so you might as well just get the ad revenue. To get rid of the ads, you have to join YouTube Premium, which I don't make any money from that. All right, let's see if we get some continuation forming here. We're getting a little, again, this is a range-bound market, so you got to be careful betting on continuation, right? Yeah, YouTube Premium. I have YouTube Premium. YouTube Premium is very much so worth it. Kale says you do actually make money from that if you were a YouTube Premium subscriber. I don't know. Listen, the people think that like YouTubers, oh, you make all this money from. If you're Mr. Beast, obviously that's true. The amount of money that I think day trading streamers make off of their ads is so small compared to what you just make from trading that I don't even look at it. Jeremiah, what are you looking for in channel scalp setups? That last trade had me a little confused. I was just buying a 3+ touch point ascending support. That's it. Plus I had, of course, the 20 EMA on the 5-minute chart, like 15 points below there, which acted kind of as a secondary backstop, which actually did end up helping out a little bit. No, I know, Kale. I hear you. All right, let's see if we can get a couple of consecutive bull bars. Getty keeps asking what kind of music this is. I don't know. It's copyright. It claims to be copyright free on Spotify. It's just a playlist. Though it's not. I keep getting copyrighted on the music. Oh, so that's a good point, actually. I keep getting emails, so all the money's going to whoever makes the music anyway. But whatever. You want to support the channel, you can use code BIG. Best deal always, Apex, take Profit Trader, and you get a deal anyway. Everybody wins. All right, this market's range bound here again. I'm watching, if we get another little channel set up, but I gotta tell you, I mean, we're seeing kind of this is turning into a sideways channel, right? I mean, we have kind of a flat top forming, kind of a flat bottom forming. So we gotta see this break one way or the other. Higher high. Did you set your stop loss based on 40 points? Yep, stop was 40 points. I ran 1 to 2 reward to risk on that last trade. So stop was 40 points. I ran a 20-point take profit. Michael, daily loss stopped me out on the last trade that you won on. Better Monday. All right, Michael. Hey, enjoy the weekend. Don't think about it. It's done. Put it in the past. How are you guys all performing today? I mean, you know, really, this market, it's been very slow. You look at the bottom of your screen there, the New York session range, I mean, it's tight. Again, I'm not quite done yet here. I've had one trade all day, if you're just joining us. Negative reward to risk, so just a little guy. That's how we sit. You know, I'll take it. I'm not going to complain about it, but kind of slow. Not a lot of setups. We've been getting teased kind of all day here. Scrumptious down 300 at the start, now break even. Brandon, no trade day. Good day to practice patience. Superfly up 50 bucks. Skeptic got one trade for 2R. Chris is up on about 5 different 5 to 10 channel scalps over the past hour. Cool, man. Good work. Nico, can you explain what happens if you trade Asia or London session? Why does it seem no American scalpers running Discords or YouTubes seem to do it? Does the strategy fail more? Why? Well, I'll tell you my truth. I perform best in New York session. I perform the worst in Asia session. Not very well. Because, you know, in Asia, any continuation is usually... it feels like manipulation because it's just big pushes out of nowhere. It's like tariff news hitting in the New York session. And then to actually try to trade it, you end up having to trade ranges, but the ATR is like 8. So I get chopped out like hell in the Asia session. The London session is like early morning, so, and then heading into kind of pre-market. It's better, but it's not as good as New York. That's my truth. I can only tell you my experience. But, you know, I gotta tell you, if in certain market conditions, if it's like really hot, there's a lot of news moving things, or the market's like crashing and everyone's freaking out, Asia session kind of turns more into, you know, the off sessions can kind of start to look more like a slow New York session. Or even an average New York session, and you can trade that. But on the average day, Asia is just, I just get chopped up. I'm sure some people do great. Hey Tom, welcome. How you doing? That is the 20 EMA. And this is a 2-minute chart that you're looking at right now. Okay. All right, let's take a look at this. I mean, you know bears are looking at it, right? You gotta be careful. Listen, if you're taking big bets on big breakouts right now, we're in a range market. It's very low probability. You're not only betting on continuation, you're betting on a huge outsized move. Now, that doesn't mean it can't happen. It's just not really that market. Market inertia is almost more important than anything. There you go. See, those bears see that. Let's see if they can hold it. Mitts, okay, so low probability, high reward to risk. You've been paying attention. For a continuation higher, no, that's not a trade that I would put on, but if you're someone who trades that way, and you're bullish right now for whatever reason, yeah, this is that kind of territory. But again, the probability continues to fall off in a trend market. I'm sorry, in a range market like we're currently in, especially today when ATR is like 15 or 16. So, you know, you got to consider that. By the way, you know, I'm curious, do any of you guys trade that way? I always bring that up. Like, hey, if some of you guys are really low probability, super high reward to risk traders, where, you know, you lose 85, 90% of your trades, and then the ones that hit are huge reward to risk. Do any of you guys actually trade that way consistently? Look at this. We are getting a push. It's about damn time. We must have gotten a headline. Nothing coming through on my end yet. Someone tweeted something happened. It's interesting because that wasn't even at the 11 a.m. rollover. And right back to test that trend line. You see that? Those bears step in, they say, no, this is a range market. Only headline I just got was, it says Beijing weighs fentanyl offer to U.S. to start trade talks from the Wall Street Journal. Yeah, same headline coming through a second time. China sees potential fentanyl offer as a way to begin trade talks, sources say, again from the Wall Street Journal. Interesting. Hey, Gaines, what's my news source? Just Financial Juice. It's easy, it's cheap. And as retail traders, you know, you could get a Bloomberg terminal and try to trade news as it hits, but let's be honest, even if you have that setup, you're already going to be too slow. Even if you're running an algorithm hooked into the terminal, you're already too slow because you don't live right next to the exchange. And if your algo isn't optimized, you're behind. So I don't think it's worth trying to trade news as it hits. You don't need a terminal. I think it's a waste of $2,500 a month for most retail traders. Even if you're doing big numbers, I just think it's a waste of money. Free news is cool. Getting a lot of back wicks here on these bars. These bears are still holding on to the prayer of a range market. So you got to be careful with big wicks like that, because again, those bears are looking at this saying, hold up. Yeah, sure, we got a headline. We're making an attempted break, but the bears are going to have a higher level of confidence to try to short this, at least in the first few bars, than they might otherwise. Because, I mean, you look at the 5-minute chart, this has been a range day all day. All of a sudden, we get a breakout. Bears are like, we're good. I'll add to my short. Now we'll see if they get squeezed, is the question here. Yeah, Benny, until we get more evidence that the breakout is actually here, I tend to agree with you. We're in a range marker right now, so I see why the bears are adding here. Though, again, they open themselves out to the potential of a squeeze. If that off chance happens to come here, but just one headline? I don't know. Bears here attempting a little reversal sequence. We'll see if they can. Again, I don't care what it does. I don't care if it turns back into a range. I don't care if it breaks out into a trend. I'll just trade what the market gives me here. But we have some shrinking bull bodies. Slightly. Bears trying to pull it back. Yeah, that caused that ATR to jump up toward 23, which is better. A little bit better there. So again, if you're just joining us, been kind of a tease of a market here today. Completely range bound, but not a lot of channels. So, you know, we were able to take one trade so far, negative reward to risk. Kind of a little guy, so we're sitting up, but I'll take it. You know, I mean, I'll take it, is what I'll say. Kind of slow. So we'll see if this afternoon brings something. But for now, that's how we sit. You know, it's better than forcing a bunch of trades and ended up, you know, down 15,000. But hey, listen. Take Profit Trader right now is by far the best deal. Okay, it's 30% off, no activation fee, daily payouts. Use code BIG. Best deal always, but that is the deal right now. The no activation fee is really the headline there because it makes it like half the price. But you also get 30% off. So, all right, guys, listen, hey, do your job this weekend. Your job this weekend is to rest up, maybe do a little studying, and I will see you back here Monday morning, 8:15 a.m. Central Time. If you're not, please hit the subscribe button, and I'll see you back here. Hope to see you become a regular in the chat. We have plenty of them. All right, guys, Chris, Eric, Rick, I'll see you guys Monday. Have a good weekend. Hey, again, do your job. Don't wish the market was open. It's not. No possible way to trade anyway, so rest up. All right.